Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So currently the most interesting things happen on the intraday charts. On the daily you do not see actually big performance here, so this market mostly taking a rest after the tough Wednesday, as we said today in the Forex report. So but a few moments that we see right now tells us it seems that downside spike still has to happen. So currently it's difficult to say whether it will be really strong spike down and downside breakout action to the lower standing target, or it will be just short-term drop to complete the 1650 butterfly target. It's 127 extension. But what we see here is, first of all, on the daily chart you could see that market starts flirting with the MACD line. So we will check on weekly report on the futures, on the gold futures market, but you could do it by yourself if you would like to. But it seems that here we could get the two grabbers. So yesterday barely has touched the MACD line, at least on the fixed choice chart. This is the retail broker chart. Here is also today we could get another one. So I suggest that on the futures market, it's really might be the grabbers. Appearing of the grabbers, as you suggest, as you understand, it actually suggests the downside action and completion of this target taking out of these lows. This is the first moment on the daily. Second, yesterday we talked about the high wave pattern. So this big candle that has been formed, and as we said, the major utility of this type of patterns, it's using of this pattern is actually its ultimate points, top and bottom, because high wave indicates indecision, while market stands inside of it, it's just choosing the direction. But direction follows in the same way as a breakout will happen. So if market taking out the lows, it's just downward direction. If we'll take on top and upward direction. And the minimum target usually the length of the high wave pattern. So it's upward to breakout, and you could count it to the upside. So very similar to dealing with the rectangles. It's almost in the same way. And currently what we have on the follow time frame chart, first of all, it's very interesting that take a look. This market was not able to choose any direction, so it still remains inside the high wave, stands in a tight range. But additionally, you could see the overall performance. You could see the trend stands bullish with this MACD performance, but price action is not. It's flat, which suggests some existing of the bearish pressure. Finally, what interesting thing stands here is take a look, just compare this, the length of the thrusting action and the length while market stands flat. It's almost the same amount of the candles as in thrust and as flat standing. Besides, you could see that all the standings stand below the 30% level. So market is doing no attempt to break to the next resistance or something of that sort. This is also looks bearish and increases chances on the further downward action. On the 30-minute chart, it's not many things to comment. Actually, with this recent performance, you could see we have the double repo pattern. Those of you who are trading on the lower time frames, is good thrusting action. That was the double repo and upward fast action to the upside. So you can see market almost has completed the OP, but appearing of the guard is cheaper to sell. It doesn't need that AB should be equal to the CD. It's enough to get just a shape. That the final point has to be above the P. In this case, you could treat it as a guard is cheaper to sell if even OP target has not been completed. So right there in this moment, I do not see any clear patterns. So if you have taken position right somewhere around the top, maybe using the same guard as cheaper to sell, it's okay. You could just wait and see what will happen. If you would like to take the short position, you probably will have to wait for something like this guard is cheaper to sell. Maybe another pattern will be formed. Or alternatively, you could try it, take the general trade, as I call it, general. So you're just basing your trade on some high time frame pattern, just taking the short position, placing stop above the area, and forget about it. So this is also possible. We're not trying to get a bit better entry opportunity on lower time frames. This is also possible. Because with the current environment, well, maybe something could trigger the upward direction, but with the existence of the target here, flirting with the MACD, showing, as I said, two small retracement and actually standing in a flat range while the trend is moving higher, so all this stuff looks bearish. So in current circumstances, if you do not want to take the short position, I would also escape and avoid taking the long position by far. Maybe a bit later, once market complete the 1650 target, we will see. But right now, I think that it would be better to wait a bit. Besides, now is Friday, and it's not very attractive to take position on some weak context and trying to hold it for the weekend. This is not a good idea. So that's actually what we have currently on the gold.